Reddit stock is soaring while tariffs shake the market. How are they pulling it off? Let's go ahead and find out why with BuzzBite Studio. Hey everyone, welcome back to the channel. Today, we're diving into something super exciting. Reddit stock and why it's making waves despite all the market chaos. Leaning in if you've been following the news, you know tariffs and trade wars are shaking things up, but Reddit, it's holding strong. So, grab a coffee, get comfy, and let's break down why Reddit's growth story is one to watch. Don't forget to smash that like button and subscribe if you're new here. It really helps the channel grow. Alright, let's start with the big picture. Reddit, the front page of the internet, went public in March 2024, and since then, it's been a wild ride. Raising eyebrows, the stock's had its ups and downs, but analysts are buzzing about its potential. According to a recent article on Seeking Alpha, Reddit stock is heavily undermonetized, with a long growth runway ahead. Point aside, what does that mean? Basically, Reddit's sitting on a gold mine of opportunities to make money, and they're just getting started. Cut to chart graphic now. Let's talk numbers. Reddit's revenue comes mostly from advertising, and they're killing it there. Excited tone in 2024, their ad revenue grew like crazy, and analysts think there's way more room to grow. Why? Because Reddit has over 500 million monthly active users. That's 500 million people scrolling through memes, AMAs, and niche communities. Chuckling, I mean, who hasn't gotten lost in a Reddit thread at 2A, right? Brands want in on that action, and Reddit's figuring out how to make ads feel native, not annoying. But let's address the elephant in the room. Tariffs. Pausing for effect with all this talk about China trade wars and 125% tariffs, you'd think tech stocks like Reddit would be sweating. Shaking head no. Seeking Alpha points out that Reddit's business model is pretty insulated from tariff drama. They're not shipping physical goods or relying on global supply chains. Their product is digital, communities, content, and data. Shrugging tariffs can't touch that. So, while other companies are freaking out, Reddit's like, we're good, keep scrolling. Cut to analyst quote graphic now. Let's talk about what the experts are saying. Pointing up Oppenheimer, a big name in finance, just slapped an Outperform rating on Reddit with a $125 price target. Widening eyes, that's huge. They're basically saying, this stock's got legs. Meanwhile, Benzinga's deep dive into Reddit's options trading shows investors are feeling bullish. Big money players are betting on Reddit's stock going up, with more call options than puts. That's a fancy way of saying the market's optimistic about Reddit's future. Leaning forward, so why all the hype? It's not just about ads. Reddit's also experimenting with new revenue streams. Counting on fingers, think premium subscriptions, e-commerce integrations, and even licensing their data for AI training. Excited companies like Google and OpenAI are paying big bucks to use Reddit's data to train their models. That's a cash cow that's only going to get bigger as AI keeps growing. Of course, it's not all sunshine and rainbows. Tilting head, Reddit's stock isn't cheap, and some analysts, like JP Morgan, are staying neutral with a $110 price target. They're worried about competition from platforms like X or TikTok, and yeah, Reddit's got to keep innovating to stay ahead. Reassuring not, but with their loyal user base and knack for creating viral moments, I think they got a solid shot. Let's zoom out for a sec. Gesturing widely, the broader market's been a roller coaster lately, with tariffs spooking investors. But Reddit's carving its own path. Comp Securities gave them a market outperform rating with a $155 target. That's even higher than Oppenheimer's. They see Reddit as a unique player in social media, one that's not just surviving, but thriving in this crazy environment. After the stock's brutal slide, it now trades at a reasonable 11x sales. Consensus estimates call for the company to maintain aggressive growth rates for years to come. Here are some estimations. The company is also expected to show solid margin expansion, eventually achieving a 32% net margin by 2032. It is possible that tariff uncertainty leads to volatility in growth rates over the near term. However, with RDT having ARPU well below peers, I expect the company to sustain around 20% top-line growth over the next decade, if not longer. For reference, the company's $1.8 billion in projected 2025 revenue is dwarfed by the $4 billion at Pins, $6 billion at Snap, And of course, the $187 billion at Meta. I see a long road ahead for monetization, and this helps to explain why RDDT trades at a pronounced premium to peers. I see 15x sales as being a more appropriate value for the stock, yielding a stock price of around $136 per share. That would place the stock at around 9x 2032 sales. Assuming that the company can achieve 40% net margins over the long term and trade at 25x earnings, the stock might trade at around 10x sales upon maturity. That would suggest around 5% annual return potential, or perhaps around 14% inclusive of the earnings yield, even following a re-rating to $136 per share. So what's the takeaway? Reddit stock is a growth story you can't ignore. Pointing at camera, they've got a massive user base, multiple ways to make money, and a business that's tariff-proof. Shrugging, sure, there are risks. No stock is a sure thing. But the analysts are betting big on Reddit, and I can see why. All right, that's it for today's deep dive. Friends, what do you think about Reddit stock? Are you bullish or bearish? Drop your thoughts in the comments below. I read every single one. Pointing aside, if you want to stay on top of hot stocks and market trends, hit that subscribe button and ring the bell. Winking, thanks for watching, and I'll catch you in the next one. Peace out. Bye, and take care of yourself.